Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another investor update. Joining me today is Shanice Williams, investment advisor and my co-host for today. Today, we'll be discussing FOSRICH and Trans-Jamaica Highway. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you're ready to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn about how you can get started today. So I'll kick things off with FOSRICH, then I'll hand over to Shanice to discuss Trans-Jamaica Highway. So, FOSRICH Company Limited is a prominent Jamaican firm specializing in electrical, lighting, and solar energy products. They were initially known for their electrical supplies, but since the company has diversified its offerings to include energy solutions as well as PVC pipes and fittings, FOSRICH has established partnerships with major brands such as Huawei, Philips Lighting, Victron Energy, Siemens, and Nexans, expanding its presence from a single location to 9 locations across Kingston, Clarendon, Mandeville, and Mobay. In the past 2 years, FOSRICH has exceeded $3 billion in revenues, reaching nearly $3.7 billion, which is quite impressive. But we are seeing a decline in revenues and profits for the 6-month period ending June. So let's drill down a bit further here to see what's going on. So for the 6 months ending June, we are seeing where revenues fell off by 14% to $1.7 billion from $2 billion reported the previous period. Cost of goods sold decreased at a faster rate of 28%, down to $868 million, resulting in a 7% improvement in gross profit. Other income saw a slight increase, rising by $6 million to close at $8.5 million. However, admin and other expenses grew by 25% to $656 million. They attributed this increase primarily to higher staff-related costs due to salary adjustments, improvement in staff benefits, increased marketing expenses, higher travel and motor vehicle costs, and increased insurance costs, driven by both higher policy renewal rates and greater exposure. Additionally, we are also seeing a significant 30% increase in finance costs, which resulted from the $900 million capital market debt raise they did back in March. The proceeds here should help kickstart their operations in Guyana, along with expand their service offerings in PVC manufacturing, the transformer business, and their solar business. As a result of these rising expenses, the company recorded a net profit of $77 million, a 52% decline from the $162 million reported back in 2023. This decline marks one of the lowest quarterly profits in the last 2 years, as shown on the next slide, largely attributable to increased expenses related to their growth initiatives. And consequently, the trading EPS dropped to 3 cents, as shown in the market stats table back on the first slide. We are also seeing from the stats table that the stock is currently trading at $2.15, reflecting a high PE ratio of 72 times, suggesting that the stock is overvalued and the market is pricing some future earnings growth here. So FOSRICH is growing. They recently acquired Bayside Hardware in Montego Bay and opened a new store in Draxall, St. Anne. Their superstore at 76 Malines Road is set to be complete by Q3 of this year and is projected to potentially exceed $2 billion in sales. Additionally, they have opened an office in Tennessee in efforts of entering the U.S. market. Here, they're initially going to focus on collaborating with lumber and hardware contractors and suppliers to provide supply chain management services before branching out. The company is also expanding into the Guyana market, as I mentioned before, and expanding their PVC manufacturing and transfer repair services. And finally, beyond their physical expansion efforts, the company is also focused on growing their solar business by making solar systems and water heaters more affordable and accessible for both individuals and businesses. They are partnering with various financial institutions to offer financing options for solar water heaters within 6 months and solar systems over a period of up to 3 years. So they are actively looking for ways to grow their business. So it does indicate that shareholders are factoring all these growth potentials into their pricing of the stock. The company's balance sheet still remains robust, with assets totaling $6 billion and shareholders' equity $2 billion. While majority of the assets are tied up in inventory, FOSRICH is doing a fairly good job at effectively managing their inventory to prevent overstocking and stockouts. Their liabilities have increased by 30% to $4 billion, primarily due to the recent capital market debt raise that I mentioned earlier. But despite this, their leverage ratio remains manageable at just under 1.5 times. Overall, for a growing company, the financial risk appears appropriate. Given their expansion efforts, FOSRICH is expected to go into its high valuation, I would say, over the next 12 to 18 months and start realizing some profits. But based on all this, I don't expect the stock to increase until the company starts to realize some of these profits from these growth initiatives, which could take another 12 to 18 months. Currently trading at $2.15, the stock reached a 52-week high of $2.95 and a 52-week low of $1.80. So if you haven't yet taken any profits from selling this stock, it may be best to hold until the next few quarters. What are your thoughts, Shanice?
Thanks, Rachel. I agree with you that they're going to need some time to catch up to the price. I think it's currently overvalued a bit. And based on their plans, even with the expansion into the US territory, expanding their product lines, I believe it may already be priced in at this PE. So I'm definitely still watching them to see how well they execute all their plans and to see how they can carry down that PE and really grow towards their a better valuation. So that's my view on FOSRICH right now.
Yeah, thanks for that, Shanice. Shareholders are definitely, pricing in the earnings from these future growth initiatives into the stock price. So we definitely have to watch how this plays out over the next few quarters. Thank you. So now I'm going to hand over to Shanice for her to discuss Trans-Jamaica Highway.
So Trans-Jamaica Highway Limited handles the development, operation, and maintenance of a network of toll roads in Jamaica. And that would be the 4 toll plazas that are located at Maypen, the Vineyards, which is Old Harbour, Spanish Town, and Portmore. Now we're looking at their 6 months results ending in June. And TJH saw an increase in revenue of 9% from 36.2 million US to 39.7 million US. And they attributed this increase to the increase in traffic levels over last year, as well as the increase in the toll rates. So their operating expenses only grew by 4% to 11.3 mil. Admin expenses grew by 18%, and their finance costs actually went down by 4%. The net profit can say went up 26% to 13.9 million US, which was mainly driven by the lower finance costs and them managing their operating expenses better. And the EPS went up by 26% for the 6 months as well. Now, looking at their balance sheet, can say that both assets and liabilities would have increased slightly by 2% and 6% respectively, with shareholders' equity going up 9%. So the stock closed yesterday at $3.06 at a PE of 9.14 times, which should be just around the main market average or close to, and a price to book value of 4.41 times. It has a 52-week high of $3.73. And as you can see, this is actually one of the more liquid stocks on the exchange. It was the largest IPO at the time that it listed. And you have around 60 million units of this stock that trades on a monthly basis, which is great because For a market that is as small as the JSE, that's not something you see very often. Looking at the quarterly movements, the graph shows you that the growth of net profit over the past couple quarters has been steadily increasing, especially coming off the JIO acquisition that they did in 2022, which would have really reduced their expenses greatly. The stock price trend over the past couple months, the stock has pretty much leveled off around 310, probably steadily trading between $3 and 310 for the past couple months, you can say. And I still think that's a very good price. Personally, I'm adding Trans to my portfolio because along with opportunity for capital gains, Trans Jamaica is one of the best dividend paying stocks on the exchange. So they declared an interim dividend in March, which was at a yield of 3% to the current price. And in October or November, they should be declaring their next dividend, their final dividend, and that's anticipated to be just as good or even better. And usually around the time when Trans is declaring a dividend is when we'll start seeing a lot of activity in the stock price as well. So they would be closing the year, if the next dividend yield is close to the previous one, with a dividend yield of close to 6%, which is excellent in our market. And if we remember their projections from their dividend policy, which was outlined in the prospectus when they listed in 2020, they were projected to have a yield of 5.3% to 8.7% from the 2020 to the 2025 period, and an average of 24.5% to 35.8% after that, when their 2036 bond amortizes and they have more cash to distribute. So 2024 going into 2025, we're going to be seeing a huge increase in the payout ratio for Trans Jamaica. After 2024, their dividend payout ratio is expected to go as high as 85%. And that is going to not only affect the dividend yield, but the capital gains for the stock, because people are going to be flocking to the stock. It's highly liquid. Pensions can flock to it as well if you can get consistent dividends from it. So I definitely think going into next year, Trans Jamaica is going to be one of the biggest movers on our market. They also recently acquired the concession for the new phase 1C of Highway 2000, which is the one that runs from Maypen to Williamsfield, which would have been their fourth toll road that they added to the portfolio. And we haven't really seen what can come of that as yet. So that's definitely going to add to both their top and bottom lines. They're also supposed to drop a gas station along the toll road, another revenue line there. So I'm excited for Trans Jamaica. And as I say, I'm adding it to my portfolio. I'm constantly adding it because next year I think should be a great year for Trans. Any thoughts, Rachel?
Thanks for that, Shanice. I definitely love Trans Jamaica. As you mentioned, the company has experienced consistent growth in both revenues and profitability over the last 4 quarters. Operating 3 tolls, plan to add a 4th, the Manchester leg in August. So that's definitely going to boost some revenues there. And they're going to throw in the gas station, so that's great. And the number of vehicles using the toll points on Highway 2000 have also been increasing annually. So the company will definitely be able to benefit from organic growth. And my favorite part is the company is a top, as they mentioned, a top dividend paying stock. You know, they have a year-to-date dividend yield of 3%. Last year was 13%, and you've hinted at that increasing, the payout ratio increasing to 85%, hopefully by the end of this year into early next year. So I'm excited for that. So for investors seeking a dependable source of dividend income, you know, as she said, Trans Jamaica present a strong option for you there. And that's it for today's discussion. I'd like to thank our viewers for tuning in today. Your support is always appreciated. Also, thank you to my co-host Shanice for contributing to today's discussions. If you're curious about updates on our virtual investor forum and updates, then find us on our social media. We share our live stream date and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel. Mayberry Investments Limited and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady wins the race. Thank you.